Investing during inflation can be challenging, as rising prices can erode the purchasing power of your investments. However, there are a number of strategies that can help you protect your portfolio from inflation and even potentially profit from it. 1. Equities. Stocks have historically outpaced inflation over the long term. This is because companies are able to raise prices to offset rising costs, and their earnings tend to grow over time. However, stocks can also be volatile, and there is no guarantee that they will outperform inflation in the short term. 2. Real estate. Real estate can be a good hedge against inflation because the value of property tends to increase with inflation. Additionally, real estate can generate rental income, which can help offset the rising cost of living. 3. Commodities. Commodities are raw materials such as oil, gold, and agricultural products. Commodities tend to rise in price during inflation because they are a scarce resource. However, commodities can also be volatile, and their prices can be affected by supply and demand factors. 4. Treasury inflation protected securities. TIPS. TIPS are a type of bond that is issued by the U.S. Treasury. The principal value of TIPS is adjusted for inflation, so you are guaranteed to receive at least your principal back at maturity, even if inflation erodes its purchasing power. 5. Savings bonds. Savings bonds are a type of bond that is issued by the U.S. Treasury. Savings bonds earn interest, and the interest rate is tied to inflation. This means that the value of your savings bonds will increase with inflation. 6. Gold. Gold is often considered to be a safe haven asset, and it has historically outpaced inflation over the long term. However, gold can also be volatile, and its price can be affected by investor sentiment. 7. Diversification. Diversifying your portfolio across a variety of asset classes is one of the best ways to protect yourself from inflation. This is because different asset classes tend to perform differently during different economic conditions. 8. Rebalancing your portfolio. It is important to rebalance your portfolio periodically to ensure that your asset allocation still meets your investment goals. This is especially important during periods of high inflation, as the value of some asset classes may increase more than others. It is important to remember that inflation is a complex economic phenomenon, and there is no single investment strategy that is guaranteed to outperform inflation. However, by following the tips above, you can increase your chances of protecting your portfolio from inflation and potentially even profiting from it.